Got you. Welcome back. We've got some really fascinating stuff to dig into today. You've sent over a collection of sources that are really focused on like all these economic shifts that are happening right now.
Yeah.
You know, the big ones. We've got these significant new tariffs, and then, of course, we've got the ever-present inflation that just seems to keep, chugging along. But what's really interesting to me about the set of sources you've given us is that it doesn't just stop at, like, trying to help us understand what's happening.
Right.
It's really focused on how do we actually navigate this stuff.
Yeah.
Maybe even find some opportunities in the middle of all this change and uncertainty.
Exactly.
And that's really what we're going to be doing in this deep dive. We're going to be like looking for those pathways, looking for those opportunities. So tell me a little bit about like the range of sources that we're looking at here. What kind of stuff did you send over?
Yeah, you've given us a great mix, really, from news analysis that's like dissecting, these tariff increases. They're being called historic, right?
Yeah, absolutely.
And then on the other side, you've got all these experts weighing in on inflation. And not just, again, like you said, just trying to understand it, but, what are the actual strategies people can use? How can we benefit? How can we actually find opportunity?
Yeah.
And we've even got, like, a few well-known investors' perspectives in here.
Oh, that's great. What really jumps out at me looking at this material is the contrast.
Uh-huh.
So on the one hand, we've got this, really big government policy initiative, these huge tariffs. They're being talked about as like a turning point for the American economy.
Yeah.
A pivotal moment.
Right.
On the other hand, I'm sensing there's this undercurrent of anxiety. People are concerned about inflation.
Yeah.
They're concerned about how to protect their savings, how to actually grow their wealth during all this. And that's the mission of this deep dive, right? We want to kind of cut through all the headlines, figure out what's really important here, and then get to the actionable stuff. Like, how do we respond to all of this?
Absolutely.
Okay, so first things first, let's really break down these tariffs.
Okay.
What's the situation?
So, like you mentioned, these are huge.
Yeah.
They're being called the biggest tariff increases, like, in modern history. And the key date is April 2nd, 2025.
Okay.
That's when they went into effect. And we're talking about a 10% tariff on basically everything from almost 185 countries.
Okay.
So that's a big change right there, right? But it actually gets even more intense for some of our major trading partners.
Oh, really? Okay.
Yeah. So China, for example, they're now facing a 54% tariff.
Wow.
And then Japan and the EU, they also have significantly increased rates.
Okay, so these are not insignificant changes.
No, definitely not. It's a really big shift in policy.
So let's dig into why. Like, what's the thinking behind this? What are the people who support these tariffs saying? What are they hoping to achieve?
Well, the sources you provided frame this as like a turning point, a pivotal moment for America. They talk about it as a way to reclaim America's economic future. And they're really focused on reversing the trend of job losses, factory closures, especially in manufacturing. They specifically talk about steel, automobiles, farming. It's all about kind of like, revitalizing these sectors.
Okay, so bolstering, American industry, American manufacturing, bringing it all back.
Exactly. Bringing it back.
Okay, well, it sounds bold, but any kind of big policy change like this is bound to have people who are worried, right?
Of course.
What are the critics saying? What are they concerned about?
Yeah, their main concerns are two things: inflation and recession.
Okay, two big ones.
Yeah. They're worried that these tariffs are going to make everything more expensive.
Right.
Consumers are going to end up paying more for all sorts of goods and services.
Makes sense.
And then there's also the risk of retaliation.
Oh, right.
Other countries might impose their own tariffs on us.
Right.
And that could hurt U.S. exports, potentially lead to more job losses, even here.
Right, so potential boomerang effect.
Exactly. That's why some of your sources call this a really risky gamble.
A risky gamble. Okay, interesting. So it's not just about what's happening here in the U.S. The global trade landscape is probably reacting to all of this too, right?
Right.
What are we seeing?
Yeah, so one interesting development is that China, Japan, and South Korea are apparently starting to strengthen their own economic ties.
Really?
Yeah, kind of like they're forming a tighter alliance, maybe to offset some of the effects of these tariffs.
Okay.
And that could actually end up hurting the U.S. in the long run.
Right.
If they're trading more amongst themselves and less with us.
Yeah, it could lead to more isolation.
Exactly. Isolation. And then there's another factor that comes into play here, which is the expiration of those tax cuts from 2017.
Right.
That happened, actually, this year, 2025. And that's creating its own set of challenges.
Yeah, remind us what those tax cuts were all about.
Yeah, so they mostly benefited corporations and higher earners. And now that they've expired, the government is going to have to find a way to make up for that lost revenue.
Right.
And that could mean more borrowing, which could put more strain on the economy.
Okay, so it's like a whole bunch of moving pieces all at once, right? We've got these tariffs that are supposed to help American industry but might actually backfire. We've got this global trade reshuffling happening. We've got this potential budget crisis.
Yeah.
And it all boils down to one big question.
Mm-hmm.
Will these tariffs actually achieve what they're supposed to achieve?
Exactly. Yeah. That's the uncertainty, right?
Yeah.
Will they actually benefit the American worker in the long run, or will the negative consequences outweigh the good?
Right. Okay, so that's the tariff shockwave.
Yeah.
Now let's talk about the other big thing that your sources are focused on.
Yeah.
Inflation.
Yeah.
I mean, this is something that we all feel in our daily lives, right?
Ah.
So break it down for us. What is inflation, and how is it affecting people right now?
Well, the simplest way to put it is inflation means prices are going up.
Right.
And that means your money buys less over time.
Yeah.
And you can see this in, everyday things. Groceries are more expensive. Gas is more expensive. It's harder to save money, harder to plan for the future.
Right.
Your sources really emphasize this anxiety that people are feeling, like they're losing ground.
Yeah, that feeling of like running to stand still.
Exactly. Exactly.
But here's the thing. Your sources also suggest that inflation doesn't have to be a totally passive experience. Like, there might be ways to actually position yourself to not just survive inflation, but maybe even benefit from it.
Right. That's the key takeaway here.
Yeah.
It's about shifting your perspective, becoming proactive.
Okay, so let's get tactical. What are some of those strategies that your sources highlight?
Okay.
Like, how can we actually navigate this and maybe even find opportunities?
So let's start with a tangible asset, real estate.
Okay, real estate, always a hot topic.
It is. And your sources consistently point to real estate as something that tends to do well during inflation.
Why is that?
Well, as prices go up, property values tend to go up too.
Right.
And so does the rental income you can get from those properties. So it's like a hedge against that decreasing purchasing power.
Okay, that makes sense.
Yeah.
But real estate also requires a lot of upfront capital, right?
Yeah, it can. But for people who aren't ready to buy property directly, your sources suggest REITs.
REITs, remind us what those are.
Real estate investment trusts.
Okay.
Basically, they're companies that own and operate income-producing real estate,
Okay.
like apartment buildings, malls, office complexes, things like that. And you can invest in REITs without actually having to buy a whole property yourself.
Okay, so it's a more accessible way to get into the real estate market.
Exactly, exactly. More accessible. Now, here's a more counterintuitive strategy. Using debt, specifically mortgages, to your advantage during inflation.
Okay, now that sounds a little strange.
It does.
Usually debt is seen as a bad thing.
Right. But think about it this way. If you have a fixed rate mortgage, your monthly payments stay the same. But because of inflation, the value of the money you're using to make those payments is actually decreasing.
Right.
So over time, that mortgage becomes easier to pay off.
Okay, I'm starting to see the logic here.
Yeah.
And it's not just individuals who might use this kind of strategy.
Right. Your sources also talk about how even big companies are borrowing money right now, even if they have cash on hand.
Really? Why would they do that?
Well, because they believe that the returns they'll get from investing that borrowed money will be higher than both the interest they're paying and the rate of inflation.
Okay, so they're taking advantage of low interest rates and betting on future growth.
Exactly, exactly. Now let's talk about another classic inflation hedge.
Gold.
Gold. I mean, that's like the traditional safe haven, right?
It is. It has this long history as a store of value during uncertain times.
And the idea is, as fiat currencies lose their purchasing power due to inflation, people turn to tangible assets like gold. It's like a way to preserve your wealth. And there are lots of ways to invest in gold. You can buy physical gold. You can invest in gold mining stocks. You can buy gold ETFs.
Okay, lots of options there.
Yeah.
Now let's move into a more modern and, let's be honest, a more volatile asset class.
Okay.
Cryptocurrency.
Yeah.
So what do your sources say about crypto and its potential role in an inflationary environment?
Well, some people are talking about certain cryptocurrencies, especially Bitcoin, as a kind of digital gold.
Digital gold.
Yeah. The argument is that because Bitcoin has a limited supply and it's decentralized, it might be less susceptible to inflation than traditional currencies.
Okay.
But and this is a big but, crypto is also incredibly volatile.
Right.
So it's a high-risk, high-reward kind of play.
Definitely high risks. Okay, so we've talked about real estate, we've talked about gold, we've talked about crypto. What about stocks? How should investors be thinking about the stock market in this inflationary environment?
The key here is to focus on companies that have what's called pricing power.
Pricing power, what does that mean?
Basically, it means they can raise their prices without losing customers.
Okay.
So even as their costs go up, they can still maintain or even increase their profits.
Right.
And your sources suggest looking for companies that are stable, that are growing, that sell essential goods or have strong brands.
Okay, give us some examples.
They mention Amazon, Apple, and companies that produce consumer staples.
Okay, makes sense.
But they also emphasize diversification. You don't want to put all your eggs in one basket.
Right.
So index funds and ETFs can be a good way to spread your risk.
Okay, so we've got a lot of different asset classes to consider here. But one of the most important points that your sources make, and I think this is really empowering, is the idea of investing in yourself.
Absolutely, yeah.
Talk about why that's so important, especially during inflation.
Well, the logic is that if you're constantly improving your skills, expanding your knowledge, becoming more valuable in your field, you're less dependent on the ups and downs of the economy.
Right.
You can command higher salaries, negotiate better rates.
Okay.
And that's a hedge against inflation that nobody can take away from you.
I love that. It's like the ultimate form of control, right?
Exactly.
Okay, so we've talked about specific assets, but let's zoom out a little bit.
Okay.
What are some of the broader wealth-building principles that your sources emphasize, especially in the context of inflation?
Yeah, well, one of the biggest takeaways, and this is something that's echoed by famous investors like Warren Buffett and Ray Dalio, is that cash is trash during inflation.
Cash is trash.
Yeah.
Okay, I've heard that one before. Why is that?
Because if you're just holding on to cash, it's losing value every day as prices go up.
Right.
And your sources say the same thing about traditional bonds, especially if their yields are lower than the inflation rate.
Okay, so not necessarily the best protection.
No. So what they suggest is focusing on what they call productive assets.
Productive assets, okay.
Things like stocks, businesses,
Right.
things that actually generate income and grow in value over time.
Okay.
And again, they emphasize companies with pricing power, companies that can weather the storm of inflation.
Okay, that makes sense. Now, your sources also talk about the financial system itself and how it's kind of set up in a way that can sometimes work against individuals, especially if they're in debt or if they're relying solely on wages.
Right.
Talk about that a little bit.
Yeah, it's a bit of a, controversial perspective, but they suggest that some parts of the system, like banks, corporations, even governments, can benefit when people stay in debt, when they overspend, when they feel kind of stuck in the employee role.
Okay, how so?
Well, banks make money from interest on loans.
Uh-huh.
Corporations profit from consumer spending.
Right.
Employers might have more leverage in salary negotiations if their employees are financially stretched. And governments can get more tax revenue from people who are consistently employed.
Right.
So the point is, it's important to understand how the system works, to develop financial literacy, so you can make choices that benefit you, not just the system.
Yeah, that makes a lot of sense. And this idea of financial literacy ties into another important point that your sources make, which is that inflation doesn't affect everyone equally.
Right, exactly. They call inflation a hidden tax because it really hits people hardest who are just relying on wages, who aren't investing, whose incomes aren't keeping up with the rising costs.
Right, and it's easy to fall behind, isn't it?
It is.
Especially when you look at the data. Your sources mention that, in the last decade, the median household income grew by 20%, but inflation was around 23%.
Right.
So people are actually losing ground.
Losing ground, yeah. And when you compare wage growth to, say, the stock market, it's even more stark.
Right.
Over the past few decades, wages have grown by maybe 700%, but the S&P 500 has grown by over 4,000%.
Wow, so there's a huge difference there.
Huge.
And this all leads to a really important distinction that your sources make between being a consumer and being an investor or a business owner.
Right, exactly. They argue that if you want to really thrive in this kind of environment, you need to shift away from just being a consumer, someone who's constantly spending their money,
right,
and start thinking more like an investor, or even better, a business owner.
Okay, so how do we do that? What are some concrete steps that people can take right now to start moving in that direction?
Okay, well, first and foremost, Your sources emphasize the importance of basic financial literacy.
Okay, Financial Literacy 101. What are some good resources for that?
They mention books like Rich Dad, Poor Dad, websites like Investopedia and NerdWallet, some popular financial YouTubers like Graham Stephan.
Okay, good starting point.
Yeah, and then it's about building those fundamental habits, saving money, having an emergency fund, avoiding high-interest debt.
Right, the basics.
The basics. But then, you want to start thinking about building passive income streams.
Okay, how do we do that?
Investing. Stocks, real estate, maybe even some REITs. And then, depending on your risk tolerance, maybe exploring things like peer-to-peer lending or even some crypto.
Right, but always being cautious with those, right?
Always. Always. And don't forget about the tax advantages that come with being an investor.
Right, like IRAs and 401ks.
Exactly. And the lower tax rates on long-term capital gains.
Okay, good reminders. Anything else?
Yeah, and this is really important. Financial education is a lifelong journey. You gotta keep learning, keep staying informed.
Right.
So check out resources like The Motley Fool, The Dave Ramsey Show, things like that.
Yeah, great advice. So you, our listener, as we wrap up this deep dive, we've covered a lot of ground, haven't we? We've talked about these huge tariff changes, the uncertainty they're creating. We've talked about this persistent inflation and what it means for your wallet.
Yeah.
And we've explored a whole range of strategies for how you can not just survive all of this, but actually potentially thrive.
Exactly. And the key message here is that you're not powerless. Right.
You can take control. You can learn. You can make informed decisions.
And that's really the point, right?
Yeah, knowledge is power.
Knowledge is power. Okay, so one final thought to leave you with. These new tariffs, they're a sign of a bigger shift, right? A shift towards economic nationalism.
Yeah.
How do you think that's going to play out in the years to come? How might it affect global inflation? How might it affect your own personal investment strategies?
Right.
I want you to really think about that. And I also want you to think about how you can shift your role in the economic landscape. Can you move from being just a consumer to being more of an investor, a creator, a builder? What steps can you take today to not just weather these economic storms, but actually come out stronger on the other side? That's the challenge, and that's the opportunity.
Absolutely.
Okay, that's it for this deep dive. Until next time, keep learning, keep growing, and keep building that brighter future.
See you next time.
Restful riches, they're floating up high. Passive income steady, no need to ask why. Wealth is growing with each move you make. Invest with wisdom, don't hesitate or break. Educate yourself, don't settle for less. Get that knowledge, be your own success. Set yourself free, let the money flow. Stress-free living, that's how you grow. Restful riches, it's the life you'll see. Passive income, it's your destiny. Time for you to rise, leave the debt behind. Success is easy with the right state of mind. Stocks or real estate, make the right call. When you're educated, you can have it all. Long-term growth, let the patience be your guide. Watch your wealth build with each stride. Paying down debt, that's the first thing to do. Put your future in focus, make it shine through. No stress, no rush, just take your time. Wealth building's a rhythm, so let it rhyme. Restful riches, it's the life you'll see. Passive income, it's your destiny. Time for you to rise, leave the debt behind. Success is easy with the right state of mind. Every step you take, you're making it right. Peace of mind and the future's so bright. Building with patience, knowing you're free. Wealth is yours, just wait and see. Restful riches, it's the life you'll see. Passive income, it's your destiny. Time for you to rise, leave the debt behind. Passive income, wealth on your side. Stress-free living with your heart open wide. Diversify, don't put all in one. The path to wealth is a journey begun. Cryptos, dividends, and bonds that yield multiple streams, your future sealed. Consistency is key, let time be your friend. Don't chase the quick wins, let your wealth ascend. Compound interest